if you look at these stocks as a business and you look at where the price of gold is and where it's likely to be in a year, in 3 years, in 5 years, and look at how cheap these stocks are, it doesn't matter if the price of gold is $2,650 or $2,600 or $2,500 or $2,400. It doesn't matter. What matters is that the price is high enough for these big companies to make a ton of money, right? They're going to generate a lot of cash. They're going to increase their dividends. They're going to be buying back shares. The stock prices have to go up. But right now, nobody is even thinking about these companies as actual businesses. They just, oh, the price of gold is up. Oh, let's buy gold stocks. Oh, the price of gold is down. I better get out of my gold stocks. And so what happens is gold goes up, gold stocks goes up. Gold goes down, gold stocks get crushed. Then gold comes back up and the gold stocks go up, but they don't quite make it to where they were before they got crushed. So then gold keeps going up. Eventually the gold stocks catch up, make a new high. Then, of course, gold corrects and they get killed again, right? Nothing goes up in a straight line. Gold could go to 3,000 by the end of the year. That doesn't mean it's going to get there without any down days or without any down weeks. Of course, gold's going to have down days. It's going to have down weeks. This should be irrelevant to these gold stocks because they have so much they have to go up just to catch up to where they should already be, that all this daily trading, it's all a bunch of irrelevant noise. At some point, it won't matter. But wow, it does matter. Take advantage of the gifts that the market keeps on giving by buying these gold stocks. You know, we own the gold stocks in all of our strategies, our value strategy, our dividend pair strategy, but of course, in our gold strategy, in our gold fund, that's all we own. So that gold fund, the Euro Pacific Gold Fund, is still an incredible buy right here. You know, you can learn more about my funds at europac.com, EUROPAC.com. There is a page there on the website that goes into all the funds. I mean, once again, the big mover on the week was the Emerging Market Fund. Let me see what it did today. Up another 1%. It looks like. I don't know. I think that, yeah, or is that yes? I mean, I think it's up something like 10% in the last week and a half. So we've really started to see a big move in these emerging markets, again, led by China. China's had some huge moves coming off a very, very depressed base. There's been so much negativity on the Chinese market in the mainstream financial media throughout the year that these stocks have been really beaten down, taken out, shot, left for dead. The government stimulus, this is not the reason to buy these stocks, but it may have been the catalyst to turn them. Because, again, they were looking for a catalyst because they weren't going to stay this cheap forever. And now something has happened to wake up the market and reverse the flows. And so that is, I think, and I've been saying all year, that was the sleeper fund. It was the emerging markets. And so I think that's what people should be looking at, too. So it's emerging markets, it's commodities, it's precious metals. Those are the sectors that I think are going to do really well in this quarter, but more particularly in 2025. And I think that is regardless of the outcome of this election. Oh, before I forget to mention Bitcoin, also interestingly enough on Bitcoin was down. The Bitcoin ETFs were down about 2.5% on the week, despite NASDAQ going up, despite gold going up. Bitcoin went down. So I guess there you go. It was uncorrelated. Almost everything went up. Bitcoin went down. Interestingly, Bitcoin traded just below 60,000 a couple of times intraday, but so far it's having some support at 60,000. As I'm recording this podcast now, Friday after the close, let me see where it's trading. I think it was last I looked, it was back above 62,000. Let me see. 62,250. But when Bitcoin was below 60,000 and gold was about 2650, 2660, Bitcoin was actually more than 40% below its record high set in November of 2021, priced in gold. That is a huge bear market. They're promoting Bitcoin as a superior alternative to gold. Don't buy gold. In fact, drop your gold, dump your gold, and buy your Bitcoin. Well, if you did that at the peak of Bitcoin in 2021, you have 40% less money than if you just held on to your gold, right? Your old-fashioned yellow rock, the way they describe it, has done substantially better than Bitcoin. Now, yes, granted, that's since its all-time high, but how else do you measure a bear market but from the all-time high, right? If you want to know how bad a bad market is, right, how big it is, how much is lost, you have to find the high, and then you got to compare it to where you are right now. A lot of people in Bitcoin, accuse me of cherry picking. Well, it's not cherry picking when I'm picking the top of the market. I'm trying to, talk about how much we've declined from the peak. That's what defines the bear market. And so Bitcoin peaked almost 3 years ago. And from that peak, it's down 40%. Now, if that's not a bear market, I don't know what is. Now, the question is the bear market over? I don't think so. I've seen nothing to indicate that Bitcoin is going to stop its decline relative to gold. In fact, if Bitcoin was going to go up relative to gold, it would have already done it, right? All these new Bitcoin ETFs that were created this year, we've had outflows from gold ETFs and huge inflows in the Bitcoin ETFs. Yet despite that, despite the fact that the American public is buying all this Bitcoin and selling gold, gold is kicking Bitcoin's butt since March of this year, right? Why is that? Bitcoin should have outperformed gold. The fact that it didn't is a good indication that the bubble has popped and the air is coming out. And so this bear market, I think, is just getting started. Anyway, that's it for today's podcast. Hope everybody enjoys this weekend. Again, don't forget to give us the thumbs up, put some comments on the videos.